What if the key to becoming one of the world's richest and most influential investors isn't about taking risks, but about playing the long game? Warren Buffett, the Oracle of Omaha, turned a small investment into a multi-billion-dollar empire by following a simple yet powerful strategy. Invest in what you understand, be patient, and hold for the long term. From buying his first stock at age 11 to leading Berkshire Hathaway to global prominence, Buffett's journey proves that success in investing isn't about speed. It's about smart, disciplined choices. But what makes his story truly remarkable isn't just his financial genius. It's his relentless focus on ethical investing, his humble lifestyle, and his unwavering commitment to giving back. Ready to uncover the lessons that made Warren Buffett the world's greatest investor? Buckle up. This is a story of vision, persistence, and the timeless power of patience. A humble beginning. The early years of Warren Buffett. Warren Edward Buffett was born on August 30, 1930, in Omaha, Nebraska, during the Great Depression. His family didn't have wealth, but they had a strong work ethic and a belief in the power of education. His father, Howard Buffett, was a stockbroker and U.S. congressman, and it was through him that young Warren was first introduced to the world of finance. Buffett showed an early interest in money, business, and numbers. At age 6, he was already buying and selling packs of gum and Coca-Cola bottles to make a profit. His entrepreneurial spirit was evident even at that young age. Buffett's passion for investing grew when he was just 11 years old. He bought his first stock, City Service Preferred, a petroleum company, at $38 per share. The stock price eventually dropped to $27, but Buffett held on to it. When the stock bounced back to $40, he sold it for a small profit. In hindsight, he realized that selling too early was a mistake, a lesson that would shape his investment philosophy in the years to come. The influence of Benjamin Graham, a mentor for life. In 1947, Buffett enrolled at the University of Nebraska and later went on to study at the prestigious Columbia Business School. There he studied under Benjamin Graham, a renowned economist and the father of value investing. Graham's principles of buying undervalued stocks and focusing on long-term investments had a profound impact on Buffett. In fact, Buffett considered Graham a mentor and would go on to work for him at Graham Newman Corp after graduation. Graham's philosophy centered on the idea of intrinsic value, the idea that a stock's true worth is based on its fundamentals, not just its market price. Buffett learned from Graham the importance of buying stocks at a discount to their intrinsic value and holding them for the long term. This approach would become Buffett's guiding principle and the foundation of his investment strategy. Buffett's experience with Graham had a lasting influence, and he would go on to say that The Intelligent Investor, Graham's seminal book on investing, was by far the best book on investing ever written. The birth of Buffett Partnership Lt. After working with Benjamin Graham, Buffett returned to Omaha in 1956 and formed Buffett Partnership Lt., a private investment partnership. His strategy was simple. He sought out undervalued companies, bought them at a low price, and then held them for the long haul. His performance was outstanding, and by the time the partnership closed in 1969, Buffett had turned an initial investment of $100 into more than $1 million for each of his partners. Buffett's ability to identify undervalued companies was exceptional. One of his key strategies was to invest in businesses with a moat, a sustainable competitive advantage that would protect them from competition. He also focused on investing in companies with strong management and consistent earnings. These principles allowed Buffett to accumulate wealth steadily, and the success of his partnership set the stage for his later ventures. The acquisition of Berkshire Hathaway, the turning point. In 1965, Buffett came across a textile company called Berkshire Hathaway, which was struggling and trading below its book value. Recognizing the potential to buy it at a discount, he purchased a controlling interest in the company. Initially, Buffett tried to turn the company around by restructuring the textile operations, but over time he realized that the real value in Berkshire Hathaway was its ability to deploy capital into other, more profitable ventures. Buffett shifted the focus of Berkshire Hathaway from a textile manufacturer to a holding company that would acquire other businesses. This strategic shift proved to be a turning point in Buffett's career. He began buying well-managed, financially stable companies with strong growth potential, such as Geico, See's Candies, and MidAmerican Energy. Buffett's approach of acquiring whole companies instead of just stocks allowed him to control the businesses and drive long-term value creation. The growth of Berkshire Hathaway, the rise of the Oracle of Omaha. As Buffett continued to acquire businesses and invest in a range of industries, Berkshire Hathaway began to grow exponentially. The company's portfolio included everything from insurance and railroads to consumer goods and energy. Buffett's strategy was always to focus on businesses that he understood, companies with a proven track record of success and strong management. Over the years, Buffett's reputation as an investor grew, and he became known as the Oracle of Omaha for his uncanny ability to identify and invest in undervalued companies with strong potential. His knack for finding great businesses, his long-term vision, and his disciplined approach to investing made him a financial legend. Berkshire Hathaway's stock price soared, and by the early 2000s, it had become one of the most valuable companies in the world. Buffett's personal wealth grew to over $100 billion, and he became one of the richest men in the world. But despite his massive fortune, Buffett remained humble, living in a modest home in Omaha and adhering to his simple, value-driven investment philosophy. The power of patience and long-term thinking. One of the key principles that set Warren Buffett apart from other investors is his ability to think long-term. While many investors are focused on short-term gains and the daily fluctuations of the market, Buffett takes a patient approach. He famously said, "The stock market is a device for transferring money from the impatient to the patient." Buffett's long-term approach allowed him to ride out market volatility, avoid panic selling, and generate consistent returns over time. Buffett is also known for his emphasis on buying great companies at fair prices, rather than just seeking out bargains. He believes in investing in businesses with strong fundamentals and solid growth potential, and then holding on to them for years or even decades, allowing the power of compounding to work its magic. Buffett's patience, discipline, and commitment to buying businesses that he believed in were key to his extraordinary success. The importance of ethical investing. Throughout his career, Warren Buffett has emphasized the importance of ethical investing. He believes that an investor's reputation is one of their most valuable assets, and that investing in companies with strong values and ethical practices is essential. This is why Buffett has often avoided investments in industries such as tobacco, alcohol, and armaments, which don't align with his personal values. Buffett also believes in giving back. In 2006, he made one of the largest philanthropic commitments in history, pledging to donate 85% of his wealth to charitable causes. Buffett's philanthropy is driven by his belief that wealth should be used to improve society and support initiatives that can have a positive impact on the world. Legacy and lessons. What can we learn from Warren Buffett? Warren Buffett's success is built on a few simple but powerful principles: patience, discipline, long-term thinking, and an unwavering commitment to ethical investing. His journey to becoming the world's greatest investor is a testament to the power of compound interest, value investing, and staying true to your principles. Buffett's story is a reminder that investing is not about taking shortcuts or chasing quick profits. It's about making smart decisions, being patient, and letting time work for you. Buffett's legacy also extends beyond his financial success. His humility, work ethic, and commitment to philanthropy have made him a role model for millions. His wisdom, often shared in his famous annual shareholder letters, continues to inspire and guide new generations of investors. Warren Buffett's story isn't just about building immense wealth. It's about building wealth the right way, through patience, discipline, and a commitment to values that extend far beyond the stock market. His ability to invest with a long-term vision, his focus on ethical decisions, and his refusal to chase short-term gains are timeless principles that anyone can apply in both business and life. Buffett's journey proves that true success comes not from making quick, flashy moves, but from understanding what matters, sticking to your principles, and letting time work its magic. As he continues to give back and inspire new generations of investors, Buffett's legacy is a powerful reminder that anyone can build lasting success, with the right mindset, strategy, and a little bit of patience. So take a page from the Oracle of Omaha's playbook and let his wisdom guide you on your own path to success.